Hope you're well and doing great. This is Jordan with Conquer Trading and Investing. If you're new here, welcome. Everyone else, welcome back. There is so much going on today. Yesterday, I showed you wedges breaking out across the market. I also said that they were triggering right in front of the FOMC, right in front of earnings, and there was a good chance they would fail. Well, so far we're seeing the breakdown of 10-year continuing over here, getting above the spike. I wonder if this is getting us close to a potential trigger of the Trump taco. I almost put up a thumbnail of when Trump taco, and there was this neat chart put out over here. Market Watch has this formula. They're saying there's a mathematical formula determining when Trump is going to taco next. And you can see that we are getting towards the area over here where in the past that Trump has had to go ahead and taco. He applies pressure when able and then tacos when needed. Are we getting close to that situation? By the way, we saw the U.S. initial jobless claims came in at the lowest level since 1969. We did call the absolute turn in peak fear of the jobs market. We're seeing across the board over here as well. Something I just want to touch base with you before we get into it. There's so much to get into today, including some of this greatness over here that I can't really wait to share with you coming out from the lab. But right now, Anthropic, do you remember I said I feel like a lot of these earnings are going to be front loaded to the first quarter when you saw things like Uber spending their full year AI budget in the first quarter, when you saw the likes of like Chamath from All In Podcast saying that, they would basically just continue and exponentially growing their token usage, and they had and that's exactly what's happened. But I have to say that it seems that the recent pace right now is still, it's at 8% growth month over month. That seems pretty attractive. I wonder if Anthropic is going to be able to stabilize. I know from a lot of retail, they've been able with Fable 5 to go ahead and increase that subscription, getting $200 a month out of a lot of people instead of 100. We'll see what happens. Something I'm tracking. We're going to come back to this chart over here probably towards the end. I want to continue just painting the picture of what's going on and take a look at some of those wedge breakouts. And, the title is The Breakouts Are Failing. And that's really not true. And one of the most important things I think about Google's Alphabet's earnings yesterday was that they said that they were going to continue to utilize third parties to obtain compute power. And you could see the likes of probably today. I was going to say Iron is probably really trading up on the thing. I want to see what Hut is doing. Let's take a look over here. And on the day, I mean, yes, 6% on the day. Is that, yeah. So we are seeing select places of benefiting off of that. If you look at the sectors as well, you could see that memory is definitely on the right side today. You could see that the semis are a little bit mixed. You're seeing applied materials very much in the green and everything else slightly in the red. And then if you go ahead and you look at the breakouts that we were looking at, we looked at Bloom Energy. And we did, by the way, add this. We had this over here as the confirmation. And that's being rejected today. But off of the initial breakout over here, it's still breakout, retest, trying to resume up. It looks fine so far. It hasn't failed by any means. If you look at Micron on the breakout that we were looking at, that has now actually accelerated its run up. So this is a market that it's definitely important that it's just not a forgiving market. It's a market that's actually turning fragile right now. And I'll come back to Micron in 1 second. But if you look at the range that we've been here on the NASDAQ, you could see that, well, we're back towards the lows over here. And that's a very important level. If we break down from there, we're probably headed towards this area of support next. So something to watch out for. The longer we stay in this range, without being able to break out of it, the greater the chance. Don't forget, right now we are in one of the poorest. Well, we're in the poorest, especially during midterm elections, seasonality wise, portion of the year. We would need actually to break out above 29,700 on the NAS in order to see some type of resumption out of here. We're flirting right now with lower band support, and it is something that we are seeing a lot of. Well, under the hood, it looks like some things are deteriorating. The bears are attacking here. Again, it's important where you're focused, and Micron is an important, or the breakouts that we watched yesterday are both very important to kind of illustrate that. One of the things that we did throw caution on and was the gold breakout. And we could see that if it really did indeed break out, and it's just really, that's a conservative breakout. We saw that the aggressive, right, lower time frame, definitely a breakout over there, and it's just retesting that now. So that's a breakout, and now it's retesting. If this one is obviously on the verge of failing, right? And the best way to know when it fails is you could go one of two ways. That would be you're out now, and guess what? In and out, small trade didn't go initially in your direction with any type of force. Doesn't mean that it's ultimately going to fail, but it's a good time to kind of, under this type of pressure, just back away. It was an aggressive entry. It was an aggressive chance. It wasn't a conservative opportunity yet, and you might be better off just playing it safe. It doesn't seem like the time that you want to be aggressive right over here. Something like this would be the absolute failure, and where your stop loss should be at that particular point. You're just wrong. Get out and stay on the side. Listen, gold needs to still, from my view, it needs to prove itself. A lot of people are looking towards gold right now, and I'm just, ahead of the Fed, I'm definitely concerned. If there were to be some type of surprise hike, gold would definitely reel off of that. So something that I'm watching over here or cautious of. Definitely seeing today another sector that's in the green is the biotech pharmaceuticals. And of course, a lot of traders are watching this. And again, I'm watching if this gets out of control. If it does, I think that what we're going to see though is that Trump taco. So remember, it wasn't too long ago where yields up again were really railing, and Trump went ahead and did that taco. So that's something to watch out for. Of course, it could get out of control back over here in May. And then you could see over here in May was the taco. And we'll see. We have our eyes on it. I don't know if that's the trigger that's going to cause a potential seasonal sell-off in the NASDAQ, or whether or not, Intel after the bell today, but obviously, most importantly, as we see the rest of the hyperscalers come into earnings next week, Wednesday with Meta and Microsoft, followed by Amazon. It's a big deal. And you can see over here that just Mag 7 just getting wrecked. We pointed to a level some people are watching earlier in the week on the Mags. And let me just go ahead and just bring it up over here. We're trading below it now. So I don't agree with it. Take it maybe, I don't know. Definitely seeing a lot of deterioration happening under the hood. There was the belief from Bank of America's Harnett that below 65, that's something that would just completely derail the market. I can't make any type of assessment until we get, as we presented on Monday, the main events that we're looking at right in front of us. Of course, we really have no control over the geopolitical one. And, it remains to be seen whether or not further pressure is applied from both sides. We're seeing both sides applying pressure, and whether or not this escalates over into Yemen right now, and we start seeing the U.S. begin attacking in Yemen, and we see this war continuing to expand, or we see some type of taco, which obviously would be embraced by the market Too soon to make any type of assessment. I wonder, are we looking at over here something like a hold on, y'all. I gotcha. I know I gotcha. I just want to see if there's any symmetry whatsoever. And yep, you could see it right over there. See the top, my eyes are on the top over here to here. So that's way more important. That's way better of let's say a important line to be triggering off of than the 65. And that would be, and that looks to me like, that looks like a bear flag all day long. That looks like nice move up, hope everything's returning to normal, and then setting up a potential really strong leg down. Watch that line. We'll be watching it together. That's something that if that breaks down, that could see some sharp escalation out of it. So there you go. You are seeing though the semis rising, why the Mag 7 is falling. Mag 7 again, I think it's more important. Let's see what let's drill down a little bit. Obviously, Tesla is not a hyperscaler, and they're getting absolutely demolished. Now, just to move over with you all and bring something else into focus, we have been during this particular consolidation drawdown out on the NASDAQ largely in cash. And that's not because we saw it coming. That's by design of us trading momentum and the edge we have in the markets. Now, obviously, these templates were just released. I'm not trading off of them live at the moment, but even still, I mean, yes, holding yesterday Tesla into earnings with just 2% of unrealized gains is not really much of a buffer with a 10% stop loss. It's certainly played out in the right direction. And look, my whole mindset is not, listen, oh, I missed that trade. That would have been a nice one to be participating. It's more importantly is this sets up really strong protection on the downside going forward. That's exactly where I want to be. And we already know that that strategy on the downside provides tremendous, tremendous alpha. It's been a banger for that protection on the downside. To have now also potentially Tesla now being able to offer the same. We've been in basically a bull. Well, we've been in a massive bull market since 2008, and you know, with the exception of 2022, where we had the bear market, it's been mostly and largely a very bullish and forgiving regime. We don't know what happens tomorrow, just because that's what the recent past has been. We never know when we're going to see a lost decade. And a lost decade could be something similar to what happened after the dot-com bubble burst. And you saw it took basically 10 years for the NASDAQ to recover. Now, that was still very tradable, not for buy and hold. For buy and hold, set people getting set back a decade. That's really, really, really painful. For traders, obviously, there was a lot of downside from 2000 to 2003, then a nice run up over the next 4 or 5 years, and then another big crash, and then 2008 found the bottom. It was good for traders, no doubt, and it taught and it framed a lot of the psychology of a lot of traders that came through there. Unfortunately, a lot of people who have been in the 2008 to today, they're not really used to any type of market pressure, and you never know when there could be an absolute crash and or meltdown, or even not that, but bear market 2022, pretty much benign, but not if you're holding. Let's take a look at all. So my takeaway is I like that this is setting up potential protection going forward. By the way, we're still over here holding right now. Bitcoin stopped out of the market, and now we're seeing just Ethereum here, only position outside of the 3 new templates, and that has nothing to do with the universal settings that we're seeing. a few more entries, 2 more on potential deck, and 1 stopped out overnight. And you could see how that throughout all of our sectors, we're able to stay into positions where you're seeing the relative outperformance. For example, here, biotech, and you could see mix. NVIDIA's getting ready potentially today to set up a stop exit at the close. That's confirmed at the close, set on the open. If that does occur at break even, though, since its entry just taking place today. And then you see obviously MU. One other thing I want to point out about this is fantastic. You could see how the weighting towards jazz has been well, higher and outsized to everything. And then you see it actually continuing to perform rightfully so. I really, really, really appreciate that. Now, again, and not to get sidetracked, but I'm going to be bringing the money management utilized here, and then we're going to be bringing it into, as we discussed in yesterday's stream, over into the way that we approach the markets through, oh, sorry, I was looking for one thing, through our stocks, and then also through Bitcoin and crypto. So those are, here we go. We have a sample of what that's going to be look like, and that's ready to be uploaded, but I'm working on other things which I want to present to you right now. So we'll take a look at that. Bitcoin trading down, under pressure today. Market's under pressure today. Does it have to do everything with Google's earnings, or does it have a lot more to do with the expanding front on which the Iraqi-US war is being fought? I don't know. I hadn't take a look at the dollar, though, and I really want to do that. And then I will move over into what I want to present with you. Dollar trading up over here. Dollar has, after breaking out above that important almost whole number, but 100, we saw the breakout, a resumption, and now potentially getting ready for a resumption out of here. Is that going to be dependent on 2 things? That's dependent largely on what happens with, obviously, the war, and then also what happens with the FOMC on next Wednesday. Keep your eye on the dollar. As the dollar rises, it pushes a massive headwind into liquidity, which markets right now will definitely be feeling if it continues to get out of control. So let's start over here. This is super interesting. This is taking what we have over here, all right, and it's our sectors with the universal setting. Let me just go ahead and just jump over here. And what's really neat about the universal settings is that, well, this is with CTM 2.x V5 plus. The plus is the regimes I've added into it, which act as filters. And what's really interesting about this is that every single one of these tickers are using the same settings. And what's really neat about that is that the chances of any type of overfitting being had are significantly reduced. And we're looking at roughly with the money management that is, let me go ahead and also expand this one this way so we can just take a look. So this is really exciting for me to take a look at what's happening in the lab right now and explaining it to you. And I'm just trying to find out what the overall CAGR expectation is on the back test, right? So you're seeing 36. This is with the universal settings. This is with what I believe to be the least chances of anything being too overfitted and producing consistent, stable results. 36% year compounded is absolutely exceptional. And then the worst drawdown happened during the tariff tantrum, which was a 26.5% drawdown. If you look at the year over year, the bear market of 2022 still was positive and still maintained a pretty much average drawdown. Very strong results. One thing that I have to say is probably you see the higher returns as we move towards 2003, 425, a little bit less over here. because there were less of the amount of the overall tickers being traded in 2019 and 2020. For example, if you look at something like, well, iron might be one. You can see it started trading over here in 2023. You can look at another one, ASTS. If you look at Rocket Lab, same thing, and it's more than several. It's more than several. So my expectation for this is that actually, as we move forward, actually that this is going to bump up a little bit. Not to say that's not absolutely super breathtaking, super consistent. Now, with that being said, and what we're looking over here is the daily buy side board. This is using the universal template, or I should say CTM 2.x V5 plus with not universal settings. And the idea here is to have an overlay, diversification through different algos, through different strategies. And you can see over here, I mean, obviously, this is just in the lab. This is in the lab, but it's exciting. So you could go ahead and see some of these producing what seems to be significant edges, significant returns. Drawdowns, roughly on average, what are we seeing over here? We should have a number that should know. I don't have it right now. It should be here, but it's not. The medium net gain from 2019, 600%. Some of these templates are called degen. And for example, let me show you the flag. For something's off. Well, something's off again. This is what I'm working on. I'll come back to that and be explaining in the days ahead. At the same time, that's two other things. At the same time that's happening, that's buy side on the daily. I was looking at the 2-hour buy side only. And you could see that there seems to be outperformance compared to, it says drawdown right there. So I was looking at the drawdown of 32%, medium on average, and since 2019, 609. That now I'm looking at from 2019 to present as a marker. However, they all have been modeled on full regime and how much data they have over here. Okay, so we have the full, and then we're having the since 2019. So the return is definitely higher. Obviously, the amount of trades is significantly different. For example, on Micron, 299 compared to, could you do alphabetical order? That'd be the easiest way for me to find, compared to 22 trades. And that's an enormous difference. And there is a degree of slippage involved. I definitely cater towards or favor the daily because of that. Of course, there's ease of trading on the daily. For example, with the sectors on V5 Plus, I trade it manually in one account and automate it in another. And it's a lot. It could be done on the daily, on the 2-hour that can only be automated. And certain brokerages is just not possible to have automated. Many are, most are, but not all. That's one thing to factor in. Another thing is the slippage. So we are on the verge of everything being frozen as saying these are the best candidates going forward, and then having everything continuing to be forward test and us tracking it on a quarterly basis. So the 2-hour is more of like having a potential ace in the sleeve, but I'm more apt to be on that daily and something I believe to be more consistent until it's proven otherwise. And then I put in on the next step was the daily buy and sell side. And you could see that there's a massive improvement in performance. You could see the drawdown is pretty close. Instead of 32, 34%, but median it improves by from 600% to 900 almost 50%. That's a big difference. I want to make sure that we don't know what happens in the future. For example, Bitcoiners at the top are like buy and hold is the only strategy, outperforms everything. And then Bitcoin trades in 5 months off 55%. It's like, oh, that was a really bad take. And much could be the same with something like, any one of the like Nvidia, and try and outperform the best performing asset in the last 10 years without buying and holding. But how do you know when that's not going to, if it corrects 55% or more or worse, right? You never know is the whole thing. And rather than moving into a situation where, and this is benign, you could see during 2022, you could see that buy and hold, you could see that things were off 40%. 40%. That's not in a dot-com bubble crash. That would look a lot worse than 40%. So that's this is what I cannot be set back like that. No one could afford to be set back with that type of drawdown, right? And you could see that the difference here, looking at obviously buy and hold, this is the only bear market regime we've had over the last several years. So it's the one I'm focusing in on to show. You could see both sides on the daily. I mean, it's positive. That's great. But you could also see the long only it was only down 5%. And in comparison to buy and hold being off 40, you know what? That's really not bad at all. So I'm not completely sold on the sell side. The reason I brought up today's strategy continuing to perform so well on the sell side, Tesla O2 seemingly to be a tremendous gift on the sell side, is because if, to have that type of protection, in this case it's protection. There's not much of a difference. There's a difference, but there's not much of a difference. And if at any point in time we could turn it in from protection, which I believe to be one of the most critical elements to our portfolios and investing, is having that protection against a bear market of 2022 or a crash. You never know what's going to happen. And both of these are offering protection. I'm trying to see if it's possible to turn it into alpha on the short side. That's something that would become attractive. This is pretty hard to decide between, right? A difference of 8%. It's a big deal, but and universal template, that's obviously buy side only. You could see during that period, overall for the year, down 9% with the worst drawdown over here, roughly 15.5. It's pretty good. So the next thing that what's happening here is everything here will be frozen and forward tested. We'll update quarterly, and then I want to see if it's possible to, much like we have buy side, to see if it's possible to work out sell side only, everything crafted just for the sell side, to see if that's possible, to see if that's something that could then offer maybe even alpha. And that's what we're going to be looking at next. So super exciting, everything taking place right now in the lab. Wanted to make sure that you are aware of it. So I want to jump over. There's a question about the poll section. It says we don't have the healthcare biotech involved over here. Let me just go ahead and check. Yes. Yeah, great. Thanks for letting me know. And that's something we'll get done today for sure. That's very, very important. Now, do we have it over here, down over here? Dun-dun-dun-dun. Completely missing. Completely missing. All right. Great. Awesome. We'll get that added for sure. There was also an issue today brought up regarding the exit on Bitcoin. And obviously, so the panel was showing an error. The way that it was executed was completely correct. So I will be rolling out in the next update. So be looking for an update to update your strategies. That panel fix. All right. Wow. CTM strong. That's beautiful, Craig. You're such an important part of this community. Grateful to be working alongside you, to have you. Let me just go ahead and just jump over and see what's going on over here. Significant pressure across the markets today. Is it too soon to make an assumption just because of Google's earnings? No, that was one. And Google's earnings work both ways, right? So you're seeing that they're increasing their capex spending. They're talking about in 2027, their spending to significantly increase. And what does that mean for the beneficiaries, right? Who's the beneficiaries, right? The semiconductors, memory chips. And then this is something just to bring up. It's a comparison between what took place during the dot-com bubble and then the bust. And you're seeing right now that like, Verizon, who was the spender, like the hyperscalers, and you can see the divergence. Pretend this is memory, like this, the semiconductors, memory. They're ripping up the hyperscalers coming into, trouble, a little bit of drawdown, a little bit, And look, we don't know what happens next week. For example, if Meta was to come out and say, "Oh, we're reducing capex spending," what is the market's reaction? Is Meta actually favored for that? Do they see an appreciation in their share price, or not? Or is it them deemed well? They've already fallen behind on their frontier model or lack of frontier model, and this is a signal that they are not going to be one of the leaders in the new era. Or is that going to be only once they start seeing a return on their investment? Remains to be seen. But you see, then what next happened over here is that once Verizon started to pull back on their spending, you saw everything here just take a nosedive. And is that the future that we're working towards? Where if we see the hyperscalers all of a sudden, who are now obviously turning negative on their free cash flows, if they pull back their spending, when they pull back their spending, if they pull back their spending, what happens to the people that are benefiting right now in this great relocation of money, right? We went from the hyperscalers being these cash cows to now, and they're still taking in a tremendous amount of cash. They're just spending more than they're keeping. They're spending it on the beneficiaries, right? And if we see them pull back, what happens over here? And that's why I'm saying, look, buy and hold, that works why things are going up and to the right. We have to have and make sure that, and of course, long only, okay, that's putting us in a protected place. But if we could turn that also into alpha, that's CTM all day long. So I thank you. I thank each and every one of you for being here today, for walking us through all of this. I hope you have a beautiful day. I'll see you all back now on the inside. God bless you. I'll see you all later.